This week on 15th March, we have 4 webinars lined up for you. Morning 10 a.m., we have Once Upon a Portfolio, Lessons from Behavioral Investing Part 3. By 11 a.m., we have Magic Pill, the extraordinary benefit and disturbing risk of new weight loss drugs. By 11 a.m., we also have Understanding Health Insurance, a beginner's guide. At last, we have the Corporate India Q3 2024-2025 result update. Join us in this webinar. Spend your weekends gaining some knowledge.
Have the markets got you confused? Because from September, you've seen this steady decline and probably a steep decline as well in your portfolio values. And suddenly it looks like in the last 1 or 2 weeks, things are looking up. So a lot of investors are speculating as to whether we've crossed the bottom, what the new opportunities are like. And it brings to mind how an investor should think about their portfolios. So if you're feeling confused about how to approach your portfolio or how to construct it or how you should visualize what it's going to create for you, then this is the video for you to watch, because let's talk about how we should be analyzing and thinking about our investment portfolios. The first important lesson is that there is no certainty as to what's going to happen. So anybody who feels that they know exactly what's going to happen, or that you're seeing very confident about a change in the pattern of the way in which the market has been moving, then I think it's time to pause and assess. There's a great quote from Howard Marks that says, "You can't predict, but you can prepare," which essentially tells us that we need to prepare for a wider range of outcomes, and we can't be certain that only one thing is going to occur going forward. So when we get into this mentality of preparing, it actually helps us to plan these lateral shifts in asset classes that can happen through the course of a market cycle, which essentially means that if you have some assets that are going to perform in this environment, we should get ready to participate in asset classes that have been non-performers. So, but this shift needs to happen gradually at the right time, and preparation is what is going to help us get that timing right. The second element that we need to think about is how much risk we are actually comfortable with. Now, we've talked extensively about how investors have a perceived risk appetite, but when the market goes through a rough patch, they come to terms with what their real risk appetite is. So, this understanding of what your risk appetite is a reflective exercise where you have to go back and think about why you made certain investment decisions. So did you make them with the expectation of earning a particular return percentage? Was it based on past returns, and were you anchoring to those returns to define what you would expect as your going forward returns? That's one way to look at it. The second way to look at it is, are you comfortable with the level of drawdown that your portfolio has seen in recent months or not? If you feel uncomfortable with the level of drawdown, then possibly you need to look at a lower risk portfolio or a mix of lower risk asset classes or lower risk styles, which could help you feel more comfortable, because when you're comfortable, you're confident, and when you're confident, you continue participating, and that is what helps you create long-term wealth. On the other hand, if the last or recent drawdowns have left you unfazed and you feel very confident about managing your money, then we go back to our preparation phase and we make sure that we're preparing correctly for the opportunities that will come and knock on our door. This brings us to the third element, which is, what is it that you want to achieve in 10 years? We've talked about this topic in detail in another video, but in this video, let's think about how our actions are reflecting our aspirations. Right? So if we want to achieve a lot of wealth in 10 years, then our actions must also reflect that same desire. So if you've been stopping SIPs or freezing into inaction and not capturing opportunities to either restructure or rebalance your portfolio, then you're clearly not moving towards your own 10-year goal. So it's very important to reflect on what we've been doing versus what we want to achieve, and see whether those two things are in alignment with each other. When we get our 10-year plan correct and we're able to act on that 10-year plan, even with small decisions and small actions today, then we know that we're on the right track. We hope this video has given you some foundation to start thinking about your portfolio and how you can act on certain things. If you found this video helpful, let us know through either liking this video or commenting below. You could also share this with a friend who needs to hear this message.